of the Forex calendar review, starting with the Scotiabank CFTC report. There hasn't been a lot of movement recently. Mostly Euro USD long side has been squaring position. That is a continuation since mid-August. Albeit price has been rising, but the long positions have been scaling back, so there's a bit of a divergence there. And the GBP side, bears have been adding, while price have been climbing aggressively. So there's a lot of positioning, bearish positioning for the pound. On top of that, I read a report where there's need to 500 billion option by the end of year expiring at 125 for GBP USD. So there seems to be a lot of downside protection and risk protection involved in the GBP pair, while Brexit negotiations are still ongoing. That's something to keep an eye out, because if those positions start to unwind, it could be aggressive move for GBP USD. But as it stands, there's no deal yet, so the risk positions are warranted, and GBP USD might find it hard to start a sustained rally until these positions unwind. The other FX pairs, there's not a lot of movement. AD mostly flat, a bit trading in the negative. Kiwi turned positive, mainly on the back of a story where RBNZ is not thinking about cutting rates into negative territory anymore, so it gave it an upswing for a couple of weeks now, specifically against currencies where market still is pricing negative rates, like for euro or pound. And the other pairs didn't see a lot of dramatic movement. Yen positioning has been declining a little bit, but has in the past very little bearing on how immediately USD JPY, Euro JPY and other yen pairs react. But generally, looking at that heavy long positioning still is undermining USD JPY as well. I like to have a look at the treasury yields, so real yields inverted against gold. We have some sort of a top in place for yields. For a 10-year yield, expectation is about 1.1 or 1%. It actually didn't even reach that level. It dropped before that, and that is supporting real yields in gold. So we can see gold is starting to form a bottoming pattern around 1850, 1860. And seeing a breakout below that really would mean we need to see yields start climbing higher, above 0.9, 1%, to see a proper breakdown of gold. There is not in the pipeline just now. It would not make a lot of sense to see that yet either. So there's the idea of a reflation trade coming through, and that could be happening, but as it stands, we don't see this developing. That would mean a gold bottom should more or less hold here where it is. Also having a look at the 5 years inflation expectation going forward. Over here, I will compare that with, I have it here as well. So I overlaid that with the Canadian index, dollar index, and it does tend to follow it neatly. So we've seen it fail to make higher highs. Inflation expectation, but Canadian dollar still trading a little bit richly on the back of commodities rallying. I would expect Canadian dollar to start forming a more robust, solid top here and start converging where inflation expectations are. In the near term, should somewhere settle around the 1.8 level as well. Going into next week, early Monday, we have loads of important data for euro and for the pound as well, starting on Monday. Pound specifically, we will have the flash manufacturing and services PMI. Flash are possibly gonna start declining below the 50 boom and bust level, which is really negative, and services unlikely to have started creating anything positive either. So data wise, we are not really in a good position for GBP USD. Last week there was loads of good reasoning to expect 133, 134. Unfortunately, it clipped 133 and start buggering out after that. There was a gap around 130 to 80 as well that got filled. That kind of leaves market participants a little bit in doldrums and makes it more difficult to expect a sustained rally. You really want to see a breakthrough in Brexit negotiations here. A quick rundown what happened with price. So we were trading around these areas, and then market started pricing in a no-deal Brexit. So the risk premium started picking up. You saw this down candle here and a further down candle there, and we saw the print in the CFTC data as well. But the reason the whole upturn still was positive, one of the main reasons was that the advisor to the PM left, who was seen as very hard Brexiteer, Dominic, he left, and that kind of gave pound a good positive push. However, going forward, specifically in the start of the week, I find it very difficult to imagine a break higher. Therefore, I would probably expect that prices somewhere should top out toward the 133 level in the early beginning of the week. And on the back of that data printing, I would expect it to come down into that blue box. And from there on, we can make a decision if it starts to climb up again, or if it starts finding a way lower, targeting possibly 127 level where we still have a gap left. The only reason where I would expect a good sustained move is really positive news coming from the Brexit side and starting to come together for a deal. But the way it's sounding and the way everybody's talking, they took all the deadlines away, so we don't really have a time frame to look forward to until the very end of December. That should mean a little bit of negative movements for the pound in the short term before it can really start rallying and finding its true place. If we do find positive news, however, on GBP, I prefer to play it against the Canadian dollar, as data comparable for pound has been playing better than Canada. I would expect to climb above here and start hitting 175 as soon as the news breaks that there's Brexit negotiations coming to a close with a positive outcome. Also, early in the week, we will have European data, German manufacturing and services PMI. I'm expecting a little bit of a downside for Euro JPY. A quick rundown again what happened here with Euro JPY as well. So in the middle until late of July, the whole package of the Euro bond and the issuance of the coronavirus bond, as they dubbed it back then, came together, and Euro JPY found a really strong rally, near to 500 pips on that. And after it started collapsing a little bit, mainly because that's how Forex works. You get a bit of a mean reversion every now and then to start loading up again. So prices started coming back up, and it was followed with news that the United States is going to come down with some stimulus, and that never happened. It will probably not happen until the late of January next year. But now a couple of countries in the Eurozone are starting to vetoing the way that the bonds are going to get distributed, because there's some new rules coming into play. Without getting too much into details, there will be new mechanisms that all these member states will have to adhere to be able to get that loan. And a couple of countries now are against that, and that is kind of killing the idea that the stimulus in the Eurozone is coming through. I would imagine in the near term we should see these lows getting taken out, and even possibly lower if the Eurobond deal gets a little bit more negative traction on the headlines. I'm going to quickly show you Bobble, basically Eurobond futures, and if I overlay that with Euro JPY, we get a little bit more technical picture there as well. So Euro JPY it's got a strong inverse correlation with Bobble. Understanding is that bonds continue to climb a little bit lower, so we should expect Bobble to reach those highs again. If it does, that would be extremely negative for Euro JPY. So using the data on Monday, I'll be looking to see if I can engage into a swing trade on the short side. GBP/USD expecting a little bit negative traction as well on GBP/USD into some earlier levels I've pointed out there. We also have gold to look forward to, because we will have the Fed minutes on Wednesday. Now gold again is in a very tight range, because the way yields are playing out, it is not expected to break down significantly lower. I imagine by Monday, latest by Tuesday, we will have reached 1850s level just for a reload to possibly explore a little bit higher levels. It's highly dependent on where yields are trading on the 10-year, so I keep a close eye on that. But the way the dynamic tends to work around the Fed minutes and Fed announcement is that gold tends to sell off early on Monday, and it finds a good rally into the event on Wednesday as well. So I'll be keeping an eye on how that's going to pan out. Ideally, I would like to either short it early Monday or see where it bottoms out to see if we can find the upside throughout the week. It will be a shorter week next week because it is Thanksgiving in the United States, and they tend to close businesses early, so you will see a lot of positioning squaring. traditionally market tends to be bullish going into Thanksgiving. Given that we are in a lockdown with COVID and all of that, that might be a little bit different. Families won't be gathering as much as they used to, and that might weigh a little bit on sentiment. So keep an eye again on S&P 500. It's again in a very tight range. There's a lot of good reason to expect why it should drop dramatically lower, but being it as S&P and Thanksgiving, there's always a reason to expect it could go higher. And a lot of currencies like the AUD and the other commodity currencies are closely linked to how the S&P and the indices are trading. So to figure out where those currencies are trading, I'll be keeping a close eye on where the S&P is. I'm going to quickly chart that as well. So currently we are looking at a very tight range around, I would say around here. If we see a sustained break and retouch under this level, I will continue looking for shorts, and the opposite is true as well. If you can take out 35.90 on the S&P 500, we're looking for longs throughout the week, specifically going into Thursday. That's all from me.